XRP is sitting at around $1.32 right now. The market just lost over $1 billion in liquidations in 24 hours. Fear is everywhere, and yet behind the scenes, the people running Ripple just made moves that should terrify every single person who sold, because what insiders are doing right now does not match what the price is telling you. And by the end of this video, you are going to understand exactly what they know that the rest of the market is completely ignoring. I'm going to break down 5 specific insider moves that happened in just the last 2 weeks, things that almost nobody is covering, and show you why each one matters more than any price chart ever could. But before I do, here is what I need from you. Smash the like button right now, drop a comment telling me how many XRP you are holding through this crash, and subscribe so you never miss a daily XRP update. The people who stay informed are the ones who come out ahead. Now let us get into what the insiders are not telling you. The first move happened on January 30th. Ripple officially launched Ripple Treasury. This is not some minor software update. This is the product that came out of their $1 billion acquisition of GT Treasury, a company that has been managing corporate money for over 40 years for Fortune 500 clients, including American Airlines. Think about that for a second. A blockchain company just spent $1 billion to buy a platform that processes approximately $12.5 trillion in payment volume every single year. They did not do that for fun. They did not do that because XRP is dying. They did that because they see something coming that we are not pricing in yet. Here is what Ripple Treasury actually does and why nobody is talking about the real implications. It lets companies manage traditional cash and digital assets in one single system. It connects to overnight repo markets and tokenized money market funds, including BlackRock's BioDeal fund. It settles cross-border payments in 3 to 5 seconds using RLUSD instead of the days it takes through traditional banking. And the most critical part that nobody is discussing, when those payments need liquidity and direct stablecoin pairs do not have enough depth, the transactions bridge through XRP on the XRP Ledger's decentralized exchange. That means every single company that adopts Ripple Treasury is potentially creating recurring XRP demand, not speculative demand, not trading demand, real institutional demand tied to payroll cycles, supplier payments, and cross-border transfers that repeat week after week after week. One analyst estimated that if just 50 companies route $10 billion quarterly through this platform, that alone creates a realistic path toward much higher XRP valuations. And we are talking about a platform designed for Fortune 500 treasurers. The scale here is staggering and the market is completely asleep on it. Now here is what I need you to understand about the second insider move. And this is the one that almost nobody has connected the dots on yet. So stay locked in because this changes everything. On February 2nd, just days ago, Ripple received full approval of its electronic money institution license from Luxembourg's financial regulator, the CSSF. This is not preliminary. This is not conditional. This is full authorization that gives Ripple passporting rights across all 27 European Union nations. Let me say that again. One single license just unlocked an entire continent for Ripple. The European Union represents the second largest economy on Earth, and Ripple just got the regulatory green light to offer blockchain-based payment solutions to every bank, every fintech, and every enterprise across the entire block. But here is what most people missed. This came just 1 month after Ripple secured its EMI license and crypto asset registration from the United Kingdom's Financial Conduct Authority. 2 of the most important financial jurisdictions on the planet opened their doors to Ripple within 30 days of each other. Ripple now holds more than 75 regulatory licenses worldwide. That makes them one of the most heavily licensed crypto companies in existence. So ask yourself a question. If XRP was going to zero, if this project was dying, if the insiders knew something negative, would they be spending hundreds of millions on licensing infrastructure across the globe? Or would they be quietly winding things down? That right there is the gap between what the price is telling you and what the insiders are actually building. And it is massive. If you are still with me right now, do me a favor, hit that like button because this next piece of information is going to change how you think about XRP's position in the financial system forever. Now, the third insider move connects directly to something that Ripple CEO Brad Garlinghouse said publicly. He went on record talking about new all-time highs for crypto. That is not a vague statement from some random influencer. That is the CEO of a company that has invested nearly $4 billion into the crypto ecosystem through strategic acquisitions in 2025 alone. $4 billion. Let me walk you through what that money built. First, they acquired Hidden Road, a prime brokerage firm, for $1.25 billion. Then they bought Rail, a stablecoin payments platform, for $200 million. Then the GT Treasury acquisition for $1 billion. When you add those up with their other investments, Ripple committed roughly $4 billion in a single year to build what they call the one-stop infrastructure shop for institutional digital finance, custody, liquidity, virtual accounts, treasury intelligence, prime brokerage, cross-border payments, stablecoin infrastructure. They built the entire stack from the ground up. No other crypto company has this, not even close. Now think about this from Garlinghouse's perspective. You do not spend $4 billion and then go on television predicting all-time highs unless you have extreme conviction in what is coming next. That money is already deployed, the infrastructure is already built, the licenses are already secured. The only thing missing is the market catching up to the reality that has been constructed behind the scenes. And this brings us to the fourth insider signal that the market is completely ignoring. 7-spot XRP exchange-traded funds are now trading in the United States. As of this week, they hold combined assets of approximately $1 billion, with over 772 million XRP tokens locked in custody. When those ETFs launched in late 2025, they absorbed $1.370 billion in cumulative inflows, with 43 consecutive trading days of positive net inflows and zero outflows. That outperformed both Bitcoin and Ethereum ETFs during the same launch period. Now, here is why this matters more than people realize. Every single XRP token that goes into an ETF is pulled off of exchanges and placed into institutional custody. That tightens the available supply. And as more money flows into these funds, the circulating supply shrinks while institutional demand grows. Standard Chartered's global head of digital assets research, Jeffrey Kendrick, projects that if XRP ETFs attract between $4 and $8 billion in total inflows throughout 2026, XRP could reach significantly higher levels. Bloomberg analysts currently assign a 95% probability to continued XRP ETF expansion throughout the year. That is not speculation. That is institutional capital positioning itself for what comes next. The fifth and final insider move ties all of this together, and it is the one that the viral videos are not telling you about. Ripple's RLUSD stablecoin, their dollar-backed digital currency, has now surpassed $1.3 billion in circulation. It launched barely a year ago. The supply increased 11 times over in just 7 months. RLUSD is not just another stablecoin, it is the settlement layer for Ripple Treasury. It is the bridge asset for cross-border payments. It is the entry point for institutional capital flowing into the XRP ecosystem. Every time a Fortune 500 company uses Ripple Treasury to make a cross-border payment, RLUSD is the vehicle. And when RLUSD needs liquidity depth, XRP is the bridge. This creates what analysts call a flywheel effect. More RLUSD adoption drives more XRP utility. More XRP utility drives more institutional demand. More institutional demand tightens supply, and tighter supply during a period of expanding adoption is the exact setup that precedes major price movements. Now, before I give you my final take, let me be absolutely clear. This is not financial advice. I am not telling you to buy, sell, or hold anything. Nobody can predict the future, and every investment carries risk. The market can stay irrational far longer than any of us expect. What I am sharing with you is publicly available information about what insiders are building and the moves they are making, while the market is focused entirely on short-term price action. Here is the bottom line. The people building XRP's infrastructure are not panicking. They are not slowing down. They are accelerating. They just spent $4 billion building a complete institutional financial stack. They just unlocked the entire European Union. They just launched a treasury platform designed for the world's biggest corporations. They have 7 ETFs accumulating tokens, and their stablecoin is growing at a pace that nobody predicted. Meanwhile, the price is sitting at $1.32 because leveraged traders got liquidated and fear took over. The question you have to answer for yourself is simple. Do you trust what the price is telling you today? Or do you trust what the insiders are building for tomorrow? Let me know your answer in the comments. Tell me, after everything you just heard, are you buying this dip or are you waiting on the sidelines? Subscribe for daily XRP updates, and I will see you in the next one.